Before you invest, you need to truly understand your market. Let's look at a systematic way to analyze your target area. Step 1. Define your goals. Are you seeking monthly cash flow, long-term appreciation, or a balanced strategy? Next, gather macro data. Look for consistent population growth of at least 1% annually to ensure demand. Identify major employers and diversified industries. This helps reduce your risk if one sector slows down. Step 3 is analyzing fundamentals. Check local home prices, trends, and the absorption rate in your area. Analyze rent levels and vacancy rates. Aim for a vacancy rate under 3% to ensure strong tenant demand. Understand zoning. Review official community plans for future growth areas and upcoming bylaw changes. Now run your financial models. Plug your numbers into a property analyzer to calculate your cap rate and ROI. Connect with local professionals. Investor-focused realtors and property managers are your eyes and ears on the ground. Compare your chosen market to others and monitor listing to sales ratios every month to stay ahead of the cycle. Finally, never skip the physical inspection. It's essential for identifying repairs before you finalize any offer. Align your market choice with your strategy and use a structured checklist every time.